Market watchers say today's Supreme Court's verdict on the recirculation of old naira notes may not have much of an impact on the markets following the liquidity mop-up that was recorded since the policy began. But meanwhile, traders at UBA say buying interest seen on the 2037 and 2049 papers is due to high system liquidity. Chuka Nwachukwu, Head of Asset and Liability Management and Balance Sheet Management at UBA, joins us now for more. Chuka, it's a pleasure to have you on the program. First of all, let's get your reaction to the news by the Supreme Court. Clearly, you tend to focus more on naira in the banking system. That policy deals with naira out of the banking system. Does it have any bearing in your view?
I don't think the judgment will have any significant effect. Actually, the policy took effect in January, and then we saw the effect it had in the market, especially in the liquidity, is that we saw a lot of deposits come into the banking system, and that made the system much liquid. So I think all that has thinned out now, and then the judgment obviously wouldn't have much effect.
All right, let's focus on the markets now, and clearly liquidity continues to drive activity, and we have seen efforts to mop up that liquidity. We're also seeing interest in some of the bonds. Can you just talk us through the dynamic in terms of sentiment for particular papers?
Okay, like you rightly mentioned, liquidity has been the rule of the game. Yesterday, for example, system opened well over 1 trillion. That has actually affected most of the sentiment we've seen, especially on the T-bill side and then the bond side. We've seen particular interest on the 2037 bonds as well as 2049 bonds. This is because people are just looking for available means of investment, and putting some of these things into investment rather than being debited at 0%, by CBN in terms of CRR. I think that's exactly what we've seen this week so far.
All right. And what about the T-bill market? What can you tell us about activity there?
Yeah, it's also on the bullish side, necessitated with the liquidity. But the special attraction is on the 1-year bill. This bill came out sometime last week, at the last auction. The longer end came out at 9.9%. It's currently trading around 5%. And so you've seen that there's a huge interest in that bill because of the yield involved. The other ones are not really that attractive. They're really not trading much. So I believe that this also will continue as long as we still have much liquidity in the system.
In the past, I know the central bank used to issue what they described as special treasury bills to mop up liquidity. But now, correct me if I'm wrong, it seems the tactic now is to use the cash reserve ratio more than perhaps issuing new special bills. Will I be correct to say that?
Yeah, you're absolutely correct. But again, the central bank has so many parameters in which to mop up excess liquidity. I mean, the common one was the OMO, open buybacks, and then you have the special bill, and then of course the CRR now. So they can use any of the parameters to mop up liquidity in the system.
Okay, let's move on to the foreign exchange market. We saw the naira firm up slightly in trading recently. Any links in your view to the outcome of the elections there? Are we seeing more supply from any players in the market, or do you think this is just essentially a trading day that we can't use to judge long-term trends here?
No, I think it's just the normal up and down on the IE window. It currently appreciated, trading around the 461.4 levels. It was trading around the 462 levels on Wednesday. So I really don't think it has anything to do with the election. I just feel it's just the normal trading activity.
All right, let's leave it there. Thank you so much for your time today. Chuka Nwachukwu, Head of ALM and Balance Sheet Management at UBA.